Hey, welcome to the Worry-Free Financial Podcast. Thank you to all the listeners, and thank you especially for those that have put in comments or questions for suggested topics. We're going to go ahead and go through some of those and then just give you some general updates of what's going on in the economy today. And hopefully you guys will get something good out of this. It'll help you during this tough time. But we're going to just dive in. One of the topics that was requested was talking a little bit about retirement distributions, and a lot of this is going to be focused around just some of the stuff that's gone on with the stimulus package, and this is one of them. And there's a couple of different elements to this specific topic, but this first one I'm going to just talk a little bit about is related to required minimum distributions, and this would apply to people that are retired, that are normally having to take a certain amount out of their retirement every single year after you reach 70 and a half years old. Those required distributions have been suspended for 2020, and this is really good news for those that maybe either they can wait a little while before they take those distributions. Maybe things will look a little different towards the end of the year, or maybe you can afford to wait until next year to take distributions instead of having to take it this year. Basically, if somebody had to take a distribution now, they're taking a loss on their investments of, depending on how risky they've been with their investments, of up to 25 or 30% of the value that they would have had in their retirement even just a couple of months ago. So this allows them to not have to be forced into taking a loss on the money that they take out right now as a withdrawal. The other part of this stimulus package is related to taking out penalty-free distributions from your retirement at any age, or using that as a loan. That is up to $100,000 with no penalty. However, it is taxable. It's a taxable distribution. So you want to make sure that you're still setting aside some of that to pay for taxes. But if you do it as a loan, you don't have to pay tax, but you have 3 years to pay that back. And I'll talk a little bit more about this in a minute, but I would strongly urge you not to take money from your retirement if you can afford not to, especially during a time where if you'd had to do that now, you're taking, just as I mentioned with the people that are retired, not taking that distribution now, you're not forcing yourself to take a loss on what you've invested already. And so I have another potential idea that might work out for you guys, and I can help you with that. But before we jump on to that next topic, the other component I wanted to just touch on real quick is with the stimulus package that was enacted just last week of $2.2 trillion, there is potentially going to be, and most likely this will happen, is at some point taxes will be changed and will cause an increase in tax to make up for what's being put into the stimulus packages today. If that is the case, then this may be a good time to consider converting your traditional IRA to a Roth IRA. If you do that conversion, you will have to pay the tax on that conversion, but you won't be taxed in the future on a Roth IRA. And so that may be an advantage for you. It all just depends on your situation and whether you believe the likelihood's high of that tax increase in the future. But the other idea that I had is related to refinancing. And so you may be able to consider taking out doing a refinance right now while refi rates are kind of at an all-time low, and maybe you take some cash out if you're experiencing a cash flow shortage. That could be a good answer for you. And usually there's three real reasons I would consider doing a refinance. It would be to lower your monthly payments, to take out money to meet those current cash flow needs, or to potentially reduce the life of your loan. I will say that if you do go down the route of going through a refinance, that lenders are being much more strict right now on what they're looking for in the people they're lending to. They're going to require some additional verification of employment. So they'll probably do, within 24 hours of your loan being funded, they will verify that you're still employed, and maybe even ask some questions about likelihood of continual employment in that So that just means that if you're getting to the closing date of your loan 24 hours before it closes, they're going to be asking to make sure that you still are employed. Another thing is that minimum credit scores are raising for these lower rates, and so if you don't have maybe a 700 or higher credit score, you most likely won't be able to benefit from these all-time low rates. Doesn't mean you can't do a refinance, but you're not going to get the same types of rates that you can if you have a higher credit score, and that's always the case. I think it's just a little bit more exaggerated right now with the current situation with just a lot of demand for refinances, and with some of the social distancing and other stuff that's happening, the supply of people to process those refinances are not quite there, and so you're going to experience some of that. And the other thing is you'll experience a longer time to close your loan. So normally a lot of lenders can close in 30 days or less. It may be more like 45 days to close the loan. And then there's a couple other just things that are changed in terms of what they're looking at in terms of debt to income and some other stuff like that. But in general, those are the major changes. Another thing with the stimulus package is something that was referred to as kind of a mortgage forgiveness program. It's a forbearance of your mortgage. And I just wanted to bring some clarity to what this actually means, because I don't think a lot of people realize what it means. I think people really think that this is, I won't have to pay a mortgage for 3 or 4 months or however long they end up having that forbearance period. But what that really is doing, say that you started the forbearance period for March, you didn't pay a mortgage in March, you didn't pay it in April, you didn't pay it in May. Well, in June, if that's when your forbearance period ends, you're going to pay 4 months worth of mortgages. So if you had a mortgage of $2,000 a month, you're going to pay $8,000 in a balloon payment at the end of that time period. And so I would advise against doing that in any situation that you don't have to do something like that. There's other things that I would consider doing with cutting budget, or potentially doing trying to do a refinance to lower some of your monthly costs before you go to pursue that forbearance. Something else I think that's been on a lot of people's radar, and this actually became effective today, is people can start applying for the Paycheck Protection Program. And this is for employers of less than 500 people. That employ less than 500 people. There's several other requirements, and even some exceptions to the 500 people requirement. But basically what this is a program that's been put into place through the stimulus package to encourage employers to keep people on their payroll for the next 8 weeks. And if as long as you use the funds that are from that loan for paying for payroll costs, mortgage interest, or utilities, it ends up actually being 100% forgiven loan. So this is a great opportunity for some of those small businesses that are really hurting right now to be able to kind of help them stay afloat for this season. The one thing I would advise is that technically you can apply from today, April 3rd through June 30th. But most likely, there's $349 billion that have been allocated to this program of that stimulus package, and most likely those funds will run out probably fairly quick. And once they do, this program may be shut down. So you'll want to take advantage of that soon if you think that that's going to be something you need to do. You can apply through any existing SBA 7 lender, or through any federally insured depository institution. If you just do some searching online, you should be able to find some resources for that. But you'll want to make sure that you are abiding by those rules to use those funds for paying for your employees, your mortgage, or your interest or utilities at that time. If you don't use it for that, it becomes a loan, and it's a 2-year maturity date on that loan. At a rate of about 0.5% interest rate, so an incredibly low interest rate. But this can help a lot of companies get through this time. Just a couple other things that are just related to just what's going on right now in the economy. And as of yesterday, we had 6.6 million claims for unemployment come in just this week, and so that is yet again another record from last week. As far as stimulus checks come in, those are expected to be in the next 2, maybe 3 weeks. if you have your direct deposit information on file with the IRS, so that would mean in 2019 or 2018 you got a tax refund, the IRS would have and you had direct deposit, IRS would have that on file and would be able to directly deposit that here in the next couple of weeks. If you don't have that on file, it's going to take a while longer. They're estimating 4 to 20 weeks depending on what your income is. Out of the 150 million or so people that qualify for this stimulus package, only about 70 million have those records on file. So it may take a while before you get them. It's based on 2019 income or 2018 if you have not filed your 2019 taxes yet. You will have to prove that income in your 2020 tax return if you're kind of on the bubble of whether you qualify and all of a sudden you got a pay raise for 2020 and you no longer would qualify based on your 2020 income. You're not going to want to spend that money. You're going to want to set it aside because when you file your taxes, you're most likely going to have to repay some of that stimulus money, and so you're going to want to keep that money set aside. If you didn't file a tax return in 2019 or 2018, you can file a simple tax return that's just basically just an informational return to become eligible for that. Otherwise, when you file a 2020 tax return, that would be part of a tax credit you would be eligible for when you file those taxes. So you will get it. It may take a while. If you need some additional information just to figure out if you're eligible, you can go to irs.gov/coronavirus. One thing I want to just bring to people's attention is this has happened whenever there's been a financial crisis, is there tends to be an increase in scams. And so you may see stuff related to stimulus checks, you may see stuff related to coronavirus testing. And the general rule of thumb, just don't share your personal information unless it's with somebody that you've initiated that contact with. The IRS, or the government's not going to contact you and ask you for that information. They should have that information. So I would just not, unless you're the one that initiated the conversation, I would not share any of that information. Another thing that's been a popular topic, and this is really kind of the last topic I have for today, is in the area of investment opportunities. I've had people asking about retirement in general, and then for like individual stock investments, and just going to give you a quick little rundown of what that looks like and how to set that up. And so you're going to have to, if you wanted to invest in individual stocks, you need to create a brokerage account. You can do that through a company like E-Trade or several other different financial institutions. And then the next step, it's pretty straightforward. The next step would be you need to transfer money to that account. And then you have the ability to then just start making purchases of stock. And so in general, my rule of thumb is I want to invest in companies that have a good track record. If you looked back even if you go back to 2008 or even a little earlier, and you see companies that maybe had some tough time during the financial crisis of 2008, but came out of it really strong and have been really strong since. Just really well-known companies. They're going to be typically going to be pretty strong through that. You may also want to look for companies that maybe are undervalued right now, and that's maybe some of the industries like airlines or entertainment, some of those that have been very heavily impacted right now. There's going to be travel still after this is all said and done. There's not going to be just, nope, we're no longer doing flights anymore. There's going to be airlines. There may be some airlines that don't make it through this, but in general, there's going to be airlines that are still going to be in operation, and their value is going to come up. It's just a matter of time. It may not be overnight. It may not be for a couple years, but there will be travel again, and so those are probably some undervalued companies. And typically with something like this, there's also going to be a culture change, and so maybe you might want to look for some things that maybe there's going to be a tendency for people to do more stuff online, and so maybe some tech companies that maybe are focused on doing things online might be good buys for you as well. A thing to remember is that there's never a guarantee on any investment. And the way I look at investments, I always look at them as a long-term investment. If I'm not wanting to invest for at least 5 years, I'm not going to invest. And so that would be what I would define as long term. Obviously, there's people that have different views on that, but that's my personal view. And it's important to diversify. Don't just put all your stock into one company. Put it across different industries and into different companies. The stock market as a whole will almost always provide a positive return over 5 years, and it almost will always be a better return than bonds over that same period. Just doing a little bit of research on some information I had already. The average return on investment from 1926 to 2011 in the stock market was 10% versus 5% in bonds. And by the time you factor in inflation and taxes, your bonds are almost just keeping your value at the same versus stocks. You're continuing to build wealth. So a general guideline for right now is I know that people tend to panic during this time and have emotional decision making with, oh, I need to sell my stock because the market's tanking. And really the only way you can ever create a permanent loss in your investment is to sell those investments. Warren Buffett's Berkshire Hathaway personal holdings decreased in value by about $6.2 billion in a little over 1 month in 1998. But the answer to the question of how much did he actually lose is he lost nothing because he didn't sell. And the value of that actually increased over a period of time, and he ended up making more money than the $6.2 billion that he lost. And so my rule of thumb is that you invest for the long period of time. You don't look for short-term investments, but everybody's different in what their goals are, so you need to assess that. And then just a general rule of thumb, this is kind of unprecedented times, but typically a stock market's going to bottom out about halfway through a recession, and we are going to be entering a recession, or we're already in a recession, depending on how you look at it. But there's so much uncertainty that we really don't know where we're at, and so I'm kind of taking a chunking approach in the investments I'm making. I'm doing a little bit at a time because there's really no way to perfectly time the bottom of the market. That's all I have for today. I hope that this helped answer some questions. If you have any questions related to mortgages or refinances, I can personally help you with that. I'm a licensed mortgage originator. You can send me an email at eric@ccm.loans, and I will put that information in the comments or the description for the video. And then if you have just general questions, you can email worryfreefinancial@gmail.com, and I can respond to those. Those will also be in the description of the video. Thank you. I hope you got some good stuff out of this. I hope you'll share it with some people and tune in next week. I have decided to move my videos to Friday, so make sure that you are looking for that every Friday to come out. Thank you, and we will talk to you soon.